Hello traders, welcome back to another video. So in today's video, looking at NZD USD, and I'm just going to be doing some quick analysis, and the brokers that I use and the pro firms that I use are in the description below. You can just check them out and sign up with them. That is if you're interested in signing up with them, guys. Now, so as you can see here, this is the overall structure that we have, and what I told you is that whenever the market is pushing like this to the upside, as you know, the market does not move like this. This is just an example to show you that the market will break structures, pull back into areas of interest, you buy, break structure, pull back into area of interest, you buy, break structure, pull back into area of interest, then you buy. So same in this case, just that you just need to know where is your valid pullback and your invalid pullback. And most of you guys get trapped in this type of trading whereby you just take any break of structure that is presented to you by the markets. But like you can see here, the market is pushing up, then this is your break of structure. This is your break of structure, you cannot deny that. And then we are on the 4-hour time frame. So after having a break of structure, you just need to look for your 3 candles that are pulling back in the opposite direction. So if the candles are pushing to the upside like this, or the momentum is to the upside, it means that you expect 3 candles, guys. There should be another candle here, then you can consider this overall move as your valid pullback. But like in this case, we didn't have that. Then it means what? You just need to look at the charts, scan the charts, and see where you'll get like that 3 candle pullback. So as you can see from this point, you have your 1, your 2, this was a bit small, and then you have your 3. So as you can see here, this is your overall pullback. So it means what? You have your low as this one here, the lowest point, and then you have your highest point as this one here. So it means that this is your overall trading range. You can just use a box, that is if you want to use a box, but like I don't recommend anyone using a box, just because you need to learn how to spot your structures, know when you're in an uptrend, know when you're in a downtrend. So I'm just gonna remove this so that you can learn the hard way, guys. Now, so as you can see here, this is the overall structure. You can take your Fibonacci tool from the low to the high so that you can anticipate your areas of interest. So as you can see from this point, the area of interest that we have was this one here, around this point here. So the market is currently at that area of interest. And then what I'm also looking at was this area here. If we remove that, you can obviously see that this is another area of interest. So we're just going to move over to the lower time frame, of which is the hour time frame or the 15-minute time frame. So let's check on the hour time frame and see if like there is anything that you can use for your to your advantage. So if you zoom out, you can see that we had this sell to buy candle. So it means that there is a lot of momentum within this area here. So you can just take this candlestick here and just use it as your demand zone. Then looking at this demand zone, you can see that we also have a fair value gap here, of which this is a valid order block here, or your demand zone. Then looking left, you can also see that we had the sweep of liquidity around here, the sweep of liquidity here, taking out this weak creation buy to sell candle. So that is why I'm saying this is a valid order block. Then we have this area of imbalance. Then at the top of the structure, if you just look at the structure here around here, you can obviously see that the market tapped into this area, but like it invalidated it with multiple weeks. So what I'm looking at is what we can just remove this, and then you obviously see that these are relatively equal lows here, of which relatively equal lows means that there is liquidity in the market. So what I'm expecting is what? For the market to push down into this area of interest. This really makes sense for me. Feeling the imbalance, tapping into this area here or mitigating into this demand zone here makes a lot of sense. So let's say maybe push down, tap into it, risk entry, no risk entry, it depends on you guys. But like I'll be waiting for a low risk entry so that I can just protect my accounts, just because I'm trading multiple accounts. I don't have time to be managing each and every one of them. But like going low risk entry on this entry here should be an ideal position for me, just because I don't want to be risking too much. Low risk entries are very good when it comes to minimizing your risk, guys. Now, so a change of character should be a nice go on this one. So let's say maybe get a change of character here, and then after that I'll be looking for the last area that broke structure, or the last area that gave us momentum, of which that is your area of interest. then that is when you start looking for your buys. Stop loss can be just below here. Let's say maybe you get a 10 pip stop loss, of which that would be very nice, just because the risk to reward will be very massive, guys. Now just the anticipation, you can obviously see that this would be an 11-hour trade, guys. So I think that is it for today's video. Then if you have any questions, drop it in the comment section. Make sure that you make this video to reach like 100 likes, then I'll keep on dropping each and every day. That will show that I am dropping good content, and the algorithm will recommend a lot of videos to you guys. See you on another one. Let me take a screenshot for the thumbnail. See you on another one, guys.